Alright guys, Intel is in serious trouble. Is AMD deliver the knockout blow? Let's find out. In today's video, I'm going to discuss the various business segments going from AI to servers to CPUs, branching off into Intel's finances. And I'll give you my personal opinion on whether I'm buying, holding, or selling Intel stock at the end of this video. So make sure you stick around. By the way, is that picture applicable? Let's find out. In the meantime, Shamao says to like and subscribe. I will never be able to pronounce that word. Okay, so yeah, Intel stock is at $30.64, trading at $130 billion market cap. Comparing it to AMD, AMD is at $106.71, trading at a market cap of $260 billion. So AMD is actually the quite bigger company right now compared to Intel. And obviously, NVIDIA is a $3 trillion company. Okay, so just to give some context, here's AMD's historical numbers, not Intel, AMD. So AMD had this period, a very long period, where they were nearly bankrupt. Intel crushed them on the one end, and NVIDIA crushed them on the other end. They were just getting pushed, squeezed so tight that you see the numbers here. And it took a miracle for AMD to get through this. I'm going to go into a little bit more detail on exactly how they got through it, but for now, let's just move on. And this is AMD's historical stock chart. You can see where they went nearly bankrupt. They were trading for $2 a share. $2 a share. Today's $165 a share, or $175 a share. It's just a crazy difference. Okay, so we're going to start off in the desktop CPU segment. So in the Computex presentation last week, AMD noted that they have achieved a 16% uplift in their Zen 5 cores compared to their previous generation, and that's I'm sort of going from AMD's perspective right now, and I'm going to compare how they're doing to Intel. So here's a direct head-to-head comparison from AMD to Intel. So AMD is claiming, and they're actually usually pretty conservative, well, Lisa Su is, in her comparisons. So she's comparing Intel's top-line processor, the Core i9-14900K, the top-line desktop CPU, compared to the upcoming, this will release next month actually, in July. This is the AMD Ryzen 9 9950X. So as you can see here on the productivity side, the gains for AMD range from 7% to 56% in Blender, which is actually a very important application for many people. And then on the gaming side, the titles here range from 4% to 23% in AMD's favor. Another thing that AMD has over Intel is power efficiency. AMD is at least twice as power efficient as Intel's chips in these segments, or in the desktop CPU segment, and also in the laptop segment, but we'll get into that later. All right, so yeah, we're branching into NPUs and Ryzen AI. So this is actually going into the laptop segment is what we're doing now. I'll try to get through this quickly. I've got a lot of slides. I want to get through this really fast for you. Okay, so here on the right, now we are comparing the laptop chips. So we are comparing the Intel Core Ultra 9 185H. I'm pretty sure that's Meteor Lake, compared to the AMD Ryzen AI 9 HX370. And then you can see here that the performance difference is between 4% and 73% in AMD's favor. So AMD is the underdog, especially in laptops, but the performance gains are notable. And this new chip that AMD is releasing is actually 50 TOPS. That's a performance metric for artificial intelligence, whereas Intel's upcoming chip, their touting is going to be 48 TOPS. AMD thinks it's going to be, as you can see here, 40 to 45 TOPS. So yeah, moving on. Another benefit for AMD actually is how long they hold on to a socket. And this is really beneficial to end users. Is that okay, let me ask you a question. How old is AM4? Please note that AMD is releasing a new chip for AM4 soon. AM4, the socket, is 9 years old. So theoretically, you can have a motherboard from 9 years ago and just keep plopping new chips as you go along every year, 2 years, 3 years, 5 years. It's up to you. So it's really beneficial for the end user in order to keep the same architecture going forward. And the AM5 likewise will have a long lifespan as well. I think this is something that Intel should copy. This idea of a long lifecycle chip architecture, Intel should copy from AMD. It's really useful for users. Moving on to servers, as you can see here, AMD had a near zero market share in the mid 2010s. That's when they were nearly bankrupt. So anyway, going into the hyperscale market, hyperscalers are basically what we're talking about here is like Facebook. So you notice that for internal workloads, right here, internal workloads. So AMD actually has achieved over 50% market share in internal workloads for hyperscalers. So this will be things like LinkedIn, Facebook, and those types of applications. So this is the very profitable segment, and actually they have overtaken Intel in that particular segment. So moving on, just some performance metrics for the servers. They're comparing actually molecular dynamics with NAND, with a 3.1x performance improvement from AMD's EPYC to the latest Intel Xeon 8592 64-core. So this is Intel's upcoming processor compared to Intel's latest processor. The 8592 is Intel's current top-of-line processor. So moving on, okay, so this one's a little tricky to look at. So compare the top bar to the second bar. The second bar is Intel's top processor, and then the top bar is AMD's top processor comparatively. The bottom bar is what's in most servers today. So that's what they're trying to compare is how this current servers today, what they'll benefit by switching to either Intel or to AMD is what they're comparing here. So if they switch to Intel, they'll see a 3.4x gain. If they switch to AMD in VMmark 3, which is a virtual machine system, they'll see a 5x gain. That's what that means. Then they go on into market share. AMD estimates that they have currently 33% market share in data centers. Now, going into AI performance, AMD is estimating that they have 1.7x there. I just want to move into this quickly. Okay, so Intel, when they did their presentation at Computex, they estimated that to replace the server space, the number of racks from the old system to the new system, Intel estimated that it's a 3-to-1 ratio. AMD is saying that theirs is a 5-to-1 ratio. So for AMD, it's an 80% stack reduction. Intel, it's more like 66% stack reduction, rack space reduction. And other such numbers, you can read the numbers here if you like. Now moving on to artificial intelligence. Now in artificial intelligence, really the big name here is NVIDIA. However, I haven't seen NVIDIA's presentation yet, so I'm just going to go with what AMD said for theirs. So for AMD, the current latest chip on the market is the MI300X. And then they're going through a one-year cadence for the chip upgrades. AMD copied this from NVIDIA. So this year we're going to get the MI325X, which will have increased compute and HBM3E memory, which is actually more memory. Then 2025 will be the MI350 series. 2026 will be the MI400 series. So the Instinct MI325X, what is that? It actually has 288 gigabytes of memory, which is double the memory of the MI300X, and 6 terabytes per second of bandwidth, which I believe is equivalent to NVIDIA's offering for their Blackwell architecture. So the AMD, I don't know why I keep mispronouncing that. The MI325X, they're saying it's going to have memory bandwidth 1.3 times, and you can read the rest. Got to move forward. Keep the video short, right? So yeah, they're claiming a memory capacity lead over the B200, the Blackwell. But again, NVIDIA, the thing is, NVIDIA is the king in artificial intelligence, and I predict they will remain the king in artificial intelligence in the long term. I think NVIDIA is going to have 80 to 90% market share, at least, in artificial intelligence. I think AMD is going to top out 10, 15-ish percent, with the remainder going to Intel. That's the way I see it currently. We'll see if that changes. It's kind of the way that things go. If you talk to people, if you search around online, NVIDIA takes up, the vast majority of just the conversation space. The H100 is an enormous chip. The H100 prints $20 billion per quarter in revenue for NVIDIA. It is huge. It is huge. So anyway, AMD goes through and they did list out the AI performance throughput leadership on their server chips. That was for the EPYC chips. Was that EPYC? Yeah, the EPYC Turin chips. Sorry. All right, so the MI350X, this is the 2025 chip. They're promising FP4/FP6 data types, among other improvements. Now, the thing also there is Blackwell is already going to have FP4 data type this year. So AMD is about a year behind NVIDIA in artificial intelligence, and Intel is about a year behind AMD in CPUs. That's the way I currently see things right now. Now, getting into the numbers. This is what you're all waiting for, right? I think so. Maybe. I don't know. I like numbers. I hope you like numbers too. Okay, so yeah, for Intel, their client compute unit grew 31% year over year, which is a good number. Their data center, however, was up only 5%, which is actually just a little bit above inflation. It really should be doing better. The reason it's up only 5% is because consumers are purchasing GPUs now, more so than CPUs. That's why it's up only 5%. The other reason is that AMD's EPYC chips are actually up a significant amount. The AMD is stealing market share in the data center segment. Okay, so these are AMD's results. You can see in the bottom right, AMD, same quarter. In the same quarter, AMD's data center revenues are up 80%. That's partially due to the MI300X, and it's partially due to the EPYC lineup of chips stealing market share from Intel. On the client side, AMD is up 85%. One thing you will notice is that AMD's revenue on the client is $1.3 billion, whereas Intel's is $7.5 billion. So AMD still has a lot of catching up to do on the client side. And that's primarily due to laptops. AMD still trails significantly in laptop market share. So moving up, for Intel, the breaking out the segments, profits/losses. The operating income for the client segment is $2.6 billion, a very nice number. Data center and AI is $482 million, also a nice number. Network and Edge, $184 million. Now, the thing about Intel is their Intel foundry business. This is where Pat Gelsinger has put all the Intel's eggs into this one basket. Now, Intel's foundry, either it's going to become a success and Intel will go to the moon like TSMC, or if it fails, Intel can sink. It's one or the other. It's very binary. Pat is betting the company on foundry, on making chips for others, is basically what foundry is. They're expanding, because right now Intel only makes chips for themselves. They're expanding it to make chips for others. So they're building a ton of new factories. They're buying ASML's newest high-NA EUV machines, which are extremely expensive, by the way. And it's tons of capital expenditures, tons of expenses, and things like that. So as a result, Intel's foundry is actually posting a negative $2.4 billion. So a $2.4 billion loss in one quarter. And that's the main reason. That's actually the only real reason, the biggest reason why the total company loss last quarter was $1 billion. You'll see at the bottom, $1.069 billion total company operating loss. Now, the other thing is that does not include capital expenditures. If you include capital expenditures, you can see that here that where's the number? Right there, $5.9 billion, $5.97 billion. That's the capital expenditures that Intel spent in the last 3 months, from January to March. You can see right there, 2024. They spent nearly $6 billion in these new factories, in this Intel foundry, which is also losing a ton of money. And now Intel does not have an infinite supply of money. As you can see here, Intel started the quarter with $7 billion in cash. Obviously, they have short-term investments as well. But to burn $6 billion a quarter, they can't really sustain that for that long until they start affecting shareholder dilution, until they start tapping into their market cap and start printing more shares or taking out a loan or some means of bringing in more cash. Is basically what that means. Also digging into the numbers in graph form, so you can see their operating income used to be decent up until Q1 2022, then it plummeted in Q2 2022. This is basically for a couple of reasons. Their revenue declined substantially. That's partially due to the crash in the PC market, but you can see Intel hasn't really recovered either. They're still not making money from operating income perspective. Their gross profit actually declined from Q4. They're kind of like treading water, but they're losing a ton of money each quarter. A ton of money. As you can see here, their free cash flow last quarter was $7 billion. $7 billion. You can see they've actually done even worse in Q1 23. And it's just been a bloodbath. It has been a bloodbath. Now, here's the thing also. I think there's an error in Intel's calculation on how well their Intel Foundry will do. There's a business fundamental error, I think. The difference is this. What's the difference between Intel and TSMC? While they're both going to be making chips for others, TSMC does not design their chips. TSMC does not sell chips to end users. So Intel does. Intel both fabs and designs their own chips to sell to end users. So if you're, say, NVIDIA or AMD or any of these other companies, would you really want to sell your chip schematics? Or sorry, would you prefer to send your chip schematics to your big competitor? If you're AMD, would you send your chip schematics for your newest processor to Intel? If you're NVIDIA, would you send your schematics for their latest AI processor to Intel? I would be hesitant. And if I were them, I would stick with TSMC. I think this is the flaw in Pat's calculations. I think that, honestly, it's kind of late now, but I think Pat should have in the past either sold or spun off the foundry division and just licensed their chips from that or another company. I think that would have been a more sound decision financially. Because as you can see, all the other divisions are very profitable, but this foundry division it basically lights money on fire. It lights money on fire. Likewise, you can see the earnings per share just plummeted once they started building out these new factories. So it's very binary. Either Intel can succeed and make a lot of money, a la TSMC, or if they fail, they're going to be a much smaller company. Now, what I've done is I've created a decent valuation on AMD. It's on my Patreon. If you want to check it out, just head over to my Patreon. The link is in the description. Thank you for watching, and I'll see you in the next one.